Hello guys, my name's Colin. This is Colin Talks Crypto. A question that came up a lot, it was the most asked question for my last video, which is, when we do hit the top of the next bull run, what is your cash out plan? Well, I'm going to share with you mine. Thank you for joining me. So if you've been following me for a while, you know that I am a hardcore bull. That's why there's a bull in my logo, Colin Talks Crypto. I'm perma-bull, perma-crypto bull. So you know that I already believe we're going to hit over $200,000 for Bitcoin if fees don't hinder its ability to onboard users. And you know that I think that EOS is going to surpass $100 easily in the upcoming bull run. We're going to see tremendous gains. I quoted a 66x multiplier from the bottom, the low of the cycle correction. So for example, for Bitcoin, that was roughly, I think that was $3,400. So 66x that equals $218,000. Again, assuming there's no fees that are inhibiting things. So that's all fine and good, right? We're all going to be super ecstatic. This is going to be super exciting. All you guys who got in at like the end of 2017 and have just finally gotten like half your money back, you just hang in there, because we are going to make some big, we're going to blow $20,000 Bitcoin out of the water easily. Now for me, I've been in the crypto space for about 6 years, since 2013. I've learned a lot of hard lessons. I remember I learned my first trading lessons. And keep in mind, I'm not a trader. I don't have any stock market background. I don't know how to read graphs. This is 2013, right? And I remember having a couple $100s worth of Bitcoin, and I was trading it just like a day trader would. Every hour or 20 minutes, I'd make a trade if it went up or went down. And I quickly lost 50% of my holdings. And it was a reality shock to me, like, holy crap, you can lose money really fast in this if you don't know what you're doing. So luckily for me, I made a quick decision. No more day trading. That was done. From that day forward to this day, 6 years later, I do not day trade. I do not recommend day trading. It's hard to outcompete bots. It's basically impossible. There's people that are out there smarter than you and faster than you. So unless you really know what you're doing, and you probably need a computer algorithm or bot working on your side, I wouldn't even go there. That's just my take on it. I'm a long-term trader. It's a lot more conservative. It's a lot more safe, and you can still get huge gains. As we're talking, 50 to 66x gains in this next bull run is nothing to laugh at. I don't need to risk my crypto stash on some day trades that could go south and ruin my whole future for my crypto holdings. So in this video, I'm just going to be speaking about what I'm going to be doing, and you can take it for education and hopefully you learn something. So the first lesson, like I said, was I learned how to hold. I learned to not day trade. That was lesson number 1. Now, I rode a few bull runs up and down. I rode the bull run up to $1,150 about 3 or 4 years ago, and then the next bull run to $20,000. And you know, in hindsight, I'll be honest with you guys, I was kicking myself on the way down for not having sold some. I was so starry-eyed and in a dreamy state of how much money my crypto stash was at the top of the peak that I didn't even bother to think, hey, I should probably liquidate a significant portion of this, if not just to hold it, to reinvest. But I didn't, and I held it because, like I said, I learned that lesson, right? I'm a holder. Well, holding's not everything. You can actually do a little better than that. And so this upcoming bull run, where I predict, a $200,000 Bitcoin, I'm going to be implementing another step in my plan. So it's holding and it's long-term trading, but now it's selling at the peak and timing that peak. And that itself is an art. And I don't think anyone's going to know that perfectly. I don't think anyone could have predicted it was exactly $19,900 for this last, Bitcoin bull run. So we just do our best. So my plan, and I'm going to share this with you, this is what I'm going to do. So during the next year and a half, as we approach the peak of our next bull run, the graph is going to start going more and more parabolic and more vertical. It is a curve in hindsight. And so I'm going to be watching this on a very macro spectrum of years. When I look at the graphs, I look at year charts. I don't look at week or day charts. I do if I want to just be interested to see what's happening on the day-to-day, week-to-week, but I never make trades on the week graphs. I look at months and years really only when I make trades. That's just me personally speaking. I find it a lot safer way, and I've not lost money that way. So for me, it's been working. So what I'm going to do is when I start seeing it go vertical, now the trick is not to pull the trigger too early, right? But also the trick is not to pull the trigger too late, because if you do that, you've lost all your gains anyways. So how do you time it? just my plan. Here's what I'm going to do. I'm going to watch the graph go vertical. I'm going to base it on the predictions I made in my last video where I stated $218,000 Bitcoin and I gave a bunch of price predictions for the other cryptocurrencies. I'm going to be basing it on those numbers. So while I hope that Bitcoin hits as high as 66x, I'm going to be watching for a 50x multiplier from the low of $3,400. I don't have that number off the top of my head right now because I'm sitting outside, but when I see my portfolio surpassing the 50x multiplier from the low of what my portfolio was this past year, I'm going to begin to liquidate. Just like people say dollar cost average into the market, I'm going to dollar cost average out of the market. I'm just going to apply the same philosophy in reverse. And I'm just coming up with this on my own. This is my next step in my evolution of understanding trading and all that. I just teach myself is really what I do here. So when my portfolio is at 50x, the low point, I'm going to start selling. And I'm going to probably do it in 5% increments, 10% increments. And I'm going to sell up to 40% of my total crypto holdings at that point, maybe as high as 50%. I'm not going to liquidate more than 50%. And my logic for that is to diversify because I don't know when the bull market's going to stop. I'm making estimations and I'm making the best estimated guesses I can based on past performance, but I don't know if it's going to stop. Past performance is not a guarantee of future performance, as we've gone over before. And so I'm going to begin selling at 50x. And I'm going to continue to sell until I've got about 40 to 50% of my total holdings liquidated into stable coins. This is my plan, guys. So I'm going to be moving half my portfolio into stable coins in increments on an average basis, right? And I hope to time it so that I'm selling my last, 10% of that 50% when we're near the peak. That's my hope and my goal. Who knows how well I will achieve it, but I know one thing for sure. If I have hit at least 50x multiplier, the market is going to have to correct, and it's going to have to go below that at some point in the future. So to me, that's a very safe starting point to begin selling. There's going to be a point, however far in the future, whether it's a year or 2 years, where the price will be below that, and it's very likely that it'll go way below that. And that's the next step of my plan, which is to rebuy using the money from the stable coins. So I'm going to then take the liquidated money that I put into the stable coins and held for perhaps years and rebuy when the market has bounced back out at a new low. So let's say that Bitcoin hits 218,000. That's when I would have sold up hopefully half of my portfolio up to that point into stable coins, not sold into cash. And then I hold it. And I ride the correction down. As we've seen this last year and a half long correction cycle, it can take a while. And you have to be patient. It's all about patience. Patience rewards you. So when I've deemed that we're nearing the bottom, I'm going to again dollar cost average into the market using my stablecoin 50% portfolio. And at that point, because the market has corrected lower, it's very likely that my stablecoin holdings will be greater than my cryptocurrency holdings. And I know I'll be feeling good and pat myself on the back for not have simply been holding that whole time. And my stablecoin portfolio at that point will be proof of that because it should be a lot bigger than my crypto holdings. Again, it's not all my eggs in one basket because I don't know for sure where the market's going to stop. And let's say it just keeps skyrocketing to the moon. Well, at least I have half my portfolio still in crypto. So I didn't do everything all one direction, and that's the logic there. Now, I want to share with you guys a site I found, and I made some notes here. So it's called stablecoinindex.com. And this site is awesome. And I'm going to use this site when I begin to liquidate into stablecoins as we approach the next bull run high. And you'll see that currently, and this could change, there's Tether, TrueUSD, USD Coin, Paxos, Gemini, DAI stablecoin, BitUSD, and SUSD. Some of these I haven't even heard of. Some of these I know nothing about. But there's 8 of them, which is cool. And that's a start. And that number is only going to grow as time goes on. So we have a good selection to choose from here. Now, again, I'm going to be applying the diversification mindset when liquidating into stablecoins. I'm not going to just take half my portfolio and throw it into Tether, for example, for a couple of reasons. But what I'm going to be doing is I'm going to be going through the list of stablecoins as they exist at the time when I'm ready to liquidate, because this could change, right? I know that we have a site that's something I can start with. So I look at this site, stablecoinindex.com, and I look through all the stablecoin choices, and I pick 3 or 4 of the best ones in my eye. So right now, DAI stablecoin, hands down to me, is number one. Like, it's decentralized, it's not controlled by an exchange. I like it for that reason, and it's got a decent amount of volume and other such qualities. So for me, the DAI stablecoin is my go-to coin. But again, I'm going to pick at least 2 others, maybe 3 others, and I'm going to diversify into various stablecoins, because when you have a big enough amount of money sitting in stablecoins, you do not want to risk it. Just like you don't want to risk your crypto portfolio in one cryptocurrency. Like, I wouldn't invest all my money into Ethereum only. I wouldn't invest all my money into EOS only. I wouldn't invest all my money into Bitcoin only. And we have maximalists in all these different camps that would do that. I'm not that type of person. I diversify my risk. And I also diversify my risk when it comes to my stablecoin. I just think that's a smart way to go. So I'll give you an example. For example, the next bull run peak starts coming up, or approaching the high. I take 10% and I liquidate it into DAI stablecoin. And then the market continues to go up. Okay, I liquidate another 10% into BitUSD. And then it goes up again, and I put another 10% into Gemini stablecoin. I mean, that one I don't know. See, that's a centralized, controlled coin by a regulated exchange. I don't feel so good about that one as I do with DAI stablecoin. So I'm really hoping we see some more decentralized, uncentralized stablecoins by the next bull run high. Like EOS may have its own stablecoin, and I just need it to have enough volume. I need it to be the key pairs to control the smart contract need to be either nulled out or given to the block producers, so there's at least 15 of 21 required, things like this. I need my stablecoin to be decentralized when I put it into there. So hopefully EOS has a good volume stablecoin that's decentralized at that point. If so, I will put 10% into that stablecoin. And then it goes, the market continues to go up. Okay, I'll put another 10% into another one of these, I don't even know what this is. True USD. I mean, I'll have to research that. It could be crap. I have no idea. So let me take a step back here, and I'll tell you what the qualities are I'm going to be looking for when I'm picking my stablecoin. So first of all, it needs to have been around for a while. It needs to be tried and tested. It needs to be tried and true. It needs to be something that people have used and that has not exhibited any major problems for as long a period of time as possible. I realize that they're still coming into existence and it's a fairly new market, so there may not be that much history, but I still want to see as much history as I can. I'm not going to go throwing 10% of my crypto portfolio into a coin that's been around for 2 months. I'm just not going to do it. It's just not enough proof for me. So longevity is one factor for picking a stable coin. Higher market cap and trading volume is a necessity, because when you're putting in your funds, you want to be able to liquidate without pushing the market around. You don't want to be a whale in this market because it has $5,000 a day of stablecoin transaction volume. You don't want to be pushing the market around because your stablecoin has only $5,000 of volume per day. You want to be able to take your funds out as easily as it was to put it in. So it needs to have volume, it needs to have liquidity, it needs to have a high market cap. That's point number 2. It needs to be community respected. That's my third point. I need the community to be in agreement that this is a good choice. If there's people out there who are doubting, and they're legitimate doubts, right? Not just FUD, but like there's some security concerns, or there's the people in charge of it are dubious. Again, I'm going to look into all that. Who created this cryptocurrency, this stable coin? That's a factor. Really, it's a lot of the same factors that would go into picking a regular cryptocurrency. I'm going to be looking at that for my stable coin. So community respected and approved. And we covered decentralization. It can't be able to be shut down. I can't be subjected to United States saying, hey Gemini, hey Coinbase, hey Exchange, we're going to confiscate these funds, or we order you to freeze these users' stablecoin funds because we say so, or you go to jail, and then they have to comply, and then my funds are locked up. I'm not going to put myself in that kind of situation. So those are the qualities I'm looking for right now. As I said, DAI stablecoin looks like my favorite and best option. So that's the plan I have. Again, to summarize, it's as we approach the next bull run high, begin liquidating at 50x of my portfolio when it, based on its low to where we're at, and sell it in 5% or 10% increments into stable coins, into 3 or 4 stable coins that I've done my research on and that I've picked. And then I'm secured, right? Then if the market crashes, the market collapses, as it's historically done time and time again, look at this graph here on the side. You'll see that the market has done this parabolic climb and crash and correction to new highs, but still a cycle nonetheless, over and over again, about 5 times now. And so I do foresee this happening again. It would be kind of silly to assume that we have seen the last cycle we're ever going to see, especially with how few people on the planet have yet to adopt cryptocurrency. It's just not even really mainstream yet. There are more cycles to come. Watch my video on the S-curve of adoption if you doubt what I'm saying. If you think that Bitcoin's going to zero, you probably shouldn't even be watching this video. But anyways, watch my video S-curve of adoption, and it just goes to show how these cycles play out and how long they can take. Bitcoin's been around for 10 years. That's nothing compared to these cycles. They could take 20, 30, 40, 50, 100 years to fully reach the top of global market saturation for cryptocurrencies. So that's why I'm bullish. That's why I know these cycles are going to repeat. And so the next phase of my plans, then I have 40 to 50% of my cryptocurrencies being held in stablecoins, right? And then I have my other 50% or 60% in cryptocurrencies, and that's fine. I leave those as they are. I then wait for the market to correct down to its new low. So if it hit $200,000 for Bitcoin, maybe it corrects down to its new low might be $50,000, for example. So I watch the market. When it starts to level out, the steepness of the curve starts to flatten out. That's when I start buying back into the market. So when I see it approaching 50,000, 45,000, okay, I'm starting to buy back in because I sold at 200,000. So buying back in at 45,000 is a good starting point. You're starting to maximize the potential gain on the next bull run is what you're planning for, right? So then eventually I get all of that 40 to 50% of my stablecoin holdings, because I'm a diehard cryptocurrency advocate, back into the cryptocurrency market because I really don't want to be in fiat. Fiat's not my goal. I mean, it's okay to have some on the sidelines. I'm definitely going to have some to live off of. I actually consider it a bit of a risky proposition to be into this fiat for a little bit of time, but at the same time, I do want to maximize my gains. So I'm playing the game back and forth, teeter-totter, crypto, fiat, stablecoins, back into crypto, with the long-term goal of accumulating as much crypto as possible, not fiat, because fiat doesn't matter to me. Fiat's going to go the way of every other fiat that has the lifespan average of about 27, 28 years, something like that, before they collapse. The US dollar is not invincible. It seems like a strong currency, but they keep printing it. You cannot endlessly inflate a currency and not expect it to go to zero eventually. It's just mathematically impossible. So we've got the math on our side, guys. Play the market smart, and I will see you at the top of the next bull run. Don't worry, I'll keep you up to date on what I feel like we're doing and when we're approaching the next high, and what I'm doing. I'll just share with you when I start liquidating, and do what you wish. This video is educational advice only, and I wish you the best of luck. Again, this is me, Colin Talks Crypto, coming at you straight from Puerto Rico, and I hope you have a great day. I'll be out of commission for a little bit here now that I'm in hardcore move mode, but I look forward to get back to regular videos with you guys, and I hope you're doing great. Take care, love you, peace.